Hello everyone. So today I'm going to begin with cash flow statement. So this cash flow statement is basically covered by Accounting Standard 3, and I have already covered AS1 and AS2. So you can watch those lectures as well. So it's available on the channel in a separate playlist by the name Accounting Standards. Okay, so I'm going to cover all the AS from basic to advanced, that is everything from theoretical concepts to the practical ones. So you can just subscribe to the channel and follow us on Instagram as well. Okay, and the notes will be provided to you. Don't you have to worry about it. And of course we have a website, so all the notes will be available on the websites from now onwards, and you don't have to look for the notes on the Telegram or on the WhatsApp. You can directly go to website and view those notes. Okay, let's begin with AS3 cash flow statement. Okay, so before moving to AS3, let me just ask you a question. You have to answer that question. See, if I say that a company is earning a good amount of profit, okay, for example, we have company A. This company A earns a good amount of profit, okay, but still not able to pay off its expenses. Do you think it's possible? You have to answer the question. Do you think it's possible? See, for a normal person, it might feel like it's impossible if a company is earning a profit and still not able to pay off its expenses, right? But for a commerce students like us, we know this, right? We know that profit is not just cash, or it's not just something that is connected with the cash. So profit, what is profit? So profit is basically revenue minus expenses, right? And this comes to profit. Now this profit could be due to cash sales or non-cash sales, right? This could be because of two reasons, right? Cash sales or non-cash sales. So if in case we have to pay off some kind of expenses, that has to be paid in cash only, right? So if the cash is not available with us, how are we going to pay for it? Okay, for that purpose we prepare cash flow statements so that we have an idea about whether we have the cash available with us or not. Okay, so whether we are in a condition to pay off the expenses or not in cash. Okay, so this is something that every company must prepare so that they know their present condition and how they have to manage their overall expenses. Okay, so the cash flow statement is covered by Accounting Standard 3, and this standard is mandatory for all the companies, for all the non-SMEs, that is the non-small medium companies and the enterprises which falls under the category of level 1. Okay, you have to understand that it is only talking about level 1. Okay, the companies which are falling under the category of level 1. All right, and if we talk about the Companies Act 2013, so it mandates the preparation of cash flow statement by all the companies. Okay, all the companies have to mandatorily prepare this kind of this statement, except for the one person company, okay, small company and the dormant company, okay, for the relevant accounting period. Now let's move to certain terms that you have to understand before moving ahead. Okay, so if I say cash, okay, if I'm saying cash, what must be coming to your mind is the cash in hand, right? If I say cash, then you must be wondering about cash in hand. But in real, that is in accounting, we include cash in hand as well as cash at bank, okay, which is basically you can demand, okay, demand from any bank or institution that you have deposited, like demand deposits. Okay, so cash in hand and deposits are repayable on demand with any bank or other financial institutions. Okay, and when I am talking about cash equivalents, so these are basically the short term highly liquid investments. Short term, basically they are for just for the 3 months. Okay, the maturity period is very short, that's why they are short term, and they are highly liquid investment. That means they are readily convertible into the cash. Okay, but they are, however, they are subjected to certain insignificant risk in the change of the value. This is something that when we are dealing with cash or something, like this could be a kind of risk, because of the change in the value. Okay, but they are literally helpful when you need cash. Okay, that too in a short term. So a short term investments is the one which is due to maturity within 3 months. Okay, as I said, from the date of the acquisition. Okay, so these investments are so if you talk about investment in shares, they are not normally taken as cash equivalent because of the reason, because they are a long term investments. How? Because we normally issue shares or purchase shares for a long period of time, by keeping that in mind, like we're going to do this investment for a long period. Okay, and plus they are also not readily convertible into a cash, as in whenever you need, right? So those are not considered under this. Okay, now the next thing is the term cash flow. So what is the cash flow? Basically the flow of cash is your cash flow, right? So cash flow could be inflows or outflows. Okay, so inflows are like, for example, you have received some sort of money. Okay, if a company, like let's just take the example of company A only. So company A manufactures something or the other thing, so they purchase raw material. Purchase of raw material. Okay, whatever the examples I'm taking, you have to keep these things in mind, because these are going to be helpful whenever you will solve the problems related to the cash flow statements. Okay, next, if a company has purchased a raw material. Okay, next, if a company has pay off salary or wages to its employees, take a salary or wages to its employees, or they have paid the interest, okay, on debentures. Okay, so these are certain points that I've taken. Or you can say a company has purchased a machinery, like they were having some problems, so they thought, let's just purchase a new machinery. Okay, so these are the statement they have, like these are the transactions that they have done. Okay, next, so these were your outflows, right? You have purchased a machinery, that means you have paid the cash, right? So these are your cash outflows. Okay, you have purchased for raw material, again you have paid cash, right? Pay off salary or expense, salary kind of expenses, wages, so this is also another outflow of cash. Next, you have paid the interest to the debenture holder, so this is also a cash flow. Okay, this is also outflow of the cash. All right, now if I take the example of inflows, what could be the inflows? Like, for example, sale of goods, right? Or you have received interest on your investments, or you have sold the machinery, right? You have sold the machinery and you got something in return. Okay, so this is your cash inflows, because you have received the money. Okay, so the cash inflows are the receipts, and cash outflow is basically the payment that you're making. So any transactions which does not result in cash flow does not should not be included in cash flow statement. Okay, so if I take example of such kind of transaction, then that is the depreciation. Okay, whenever the depreciation is charged, we record that as an expense, right? But it is not involving any kind of cash flow. Okay, it is not involving any kind of cash flow, so that has not to be reported in the cash flow statement. All right, now, so the cash flow, as I have listed certain things about the cash flows, right? So now these are being basically subdivided into three categories. Okay, the types of cash flows. So first is your operating cash flow, second is your investing cash flow, and third one is your financing cash flow. Okay, so if I specifically talk about the operating cash flows, so this is basically the cash flows which are generated by operating activities. That means the main core activities of the business. For example, if I'm running a company and I manufacture some kind of products for example, I'm manufacturing product A. So whatever the amount I will receive with uh, this specific activity, okay, or whatever the payments I'm making with this specific activity, those are to be covered under what? Operating activities. Okay, basically it involves your main core business activities. Okay, so here operating activities are the principal revenue producing activities of the enterprises. Okay, the core business of the enterprise. Like for example, like you made a cash purchase and sale of goods, as in our case it's product A. Now collection from the customer for the goods, like you have sold something to the customer and now you have collected the amount, so that is under your operating cash flow only. Okay, next is payment to the suppliers, like you have purchased some kind of raw material from the suppliers, and so you have to make payment for that, right? So that has to be also be covered under operating cash flow. Next, payment to the salaries or wages, like they have the employees, the wages, sorry, the laborers, they all have worked basically on manufacturing and producing the product A, so they have to be paid, right? So this is also comes under the operating cash flow only. Okay, so you have to keep in mind one thing, that under operating cash flows we only cover the cash flows which are generated by the operating activity, that is the core business activities of the business. Okay, next is your investing cash flow. Okay, so investing cash flows are basically generated by investing activities. Now these investing activities are mainly related with what? The acquisition and the disposal of long-term assets. Okay, long-term assets like machinery. Okay, so that thing. Okay, and other investments are not included in cash flow statements. Okay, you don't have to include other statements, you have to only include what? You have to include the acquisition and disposal of long-term assets only in the investing cash flow. All right, now if I take the examples of investing cash flows, here we include the receipts from the disposable. For example, you have sold off. Now let's move to financial cash flow. So the financing cash flow basically are the cash flows which are generated by financing activities. Now these financing activities are the activities that result in the change in size and composition and borrowing of the enterprise. Like for example, you're issuing shares or debentures. So if you are issuing the shares or the debentures, then you're going to receive cash, right? That is the cash inflow. Okay, so that cash flow inflow has to be uh, recorded under financial cash flows. Okay, next is redemption of debentures or preference shares. Next, for example, like payment of dividend and payment of interest. So you have made the payment of dividend or payment of interest, that is your financial cash outflow, right? Now after this we are going to do certain examples also, like a kind of illustration. There you will get a better understanding of it. Now let me move you towards this thing. Okay, so we prepare the cash flow statements, okay, under two methods. First is your direct method and second is your indirect method. So under direct method, like these two separation is just made under operating activities. Like for other activities we follow the simple method, that is the direct method. We are not following any other method, that is indirect. Okay, so only for the operating activities we are following what? Direct and indirect method. So now we are going to begin with the performer of cash flow statement. As I have told you, there are basically two methods which are followed under cash flow statement. The first method is your direct method and the second one is your indirect method. Okay, so now we are going to discuss the performer of cash flow statement, which is being prescribed by the AS. That means you have to follow this particular form performer. Okay, so as I have told you, there are basically two methods which we follow for preparing the cash flow statement. First is your direct method and second one is your indirect method. So for direct method, if I say like all the activities follow this method, that means operating activity also following the direct method, whereas investing activity is also following the direct method, but only under operating activities actually you have two methods. Okay, otherwise the performer for investing activities and financing activities remains the same. okay, under direct method as well and under indirect method as well. Okay, only the change which happens is in the operating activity where your performance gets changed, like a direct and indirect method. Okay, so now we are going to discuss the direct method, and in the upcoming lecture we are going to discuss the indirect method. Okay, because we are going to solve a problem also related to this particular concept. Okay, so this is your performer, this you have to follow. So basically it just records the cash receipts and cash payments. Okay, that's all. This is very simple, you don't have to make a lot of adjustments, where as if I talk about the indirect method, there are certain basically adjustments that you have to make. Okay, so this is very simple, like you have to record all the operating activities. Okay, so like in this case there's certain examples which have been given. Now let's just take an example directly, come to the question, and we will solve the question. Okay, so here you have been given certain information about a particular account, about a particular company. So you have to use this information and you have to prepare a cash flow statement. Okay, so we are going to follow the direct method only. Okay, so question will be basically you will get to know which method you have to follow by looking at the question only. Right now we are going to focus on direct only, so let's just move ahead. So here you have been given the opening balance of cash and bank. Along with that, you have been given that the share capitals have been basically the shares have been issued and collection on the uh, account of trade receivable is also done. That is for the 3,50,000, and for the share issued is 5 lakh. Okay, so basically this is your cash inflow, right? Now sale of property, plant and equipment, this is also a cash flow of 70,000. And if we talk about the payment side, we have payment for the account payables. Okay, 90,000. Next, salary and wages 25,000, and so on. Okay, like we have a payment for overhead also, like 15,000. For PP we have 4 lakh. For the debenture redeem, like we have made a payment of 50,000. And then bank loan repaid. Okay, so bank loans we are considering that it's not a short term loan. Okay, so we are going to record it in a financial activities. Okay, next is your taxation. So you have to deduct the taxation amount as well from the operating activities, like the company has to pay tax, right? So that next is your dividend. So dividend comes under which category? Financing activity. Okay, next the remaining is your closing balance. Okay, so this opening balance and your closing balance, this is very helpful, especially when you are going to check your whether your cash flow statement is correct or not. So at that time it is very useful. I will be telling you how this works. Okay, so first of all, let's just write here only what are the activities and where we are going to record them. Okay, so for share capital, shares were issued, so this will be coming under what? Financing activity. And for the collection of account of trade receivables, so this is going to cover under operating activity. Sale of property, plant and equipment, that is the long term assets, right? So we are going to cover it under investing activity. Now for the payment side, if we look at the payment side, we have accounts payable, that means operating activity. Salary and wages, again operating activity. Wages to payment of overheads, so it's again a operating activity. Now for PP, like we have to record it in a investing activity. Next is your debenture redeem, so it is 50,000, right? So this comes under your financing activity. All right, next is bank loan repaid. So bank loan has been repaid, so it is going to be recorded in the financing activity. Next, for taxation, you have to deduct it from your operating activity. Balance for the dividends, so this is also your financing activity. Okay, because you have paid your basically the dividends to your shareholders. Next is the closing balance have been given. Okay, so here we are going to record all the cost receipts. So like you have to prepare a proper performer. Okay, so in our question we had cash receipts on account of trade receivable of 3,50,000. So we have recorded this first. Thereafter, we had made certain payments like 90,000 for the accounts payable and salary and wages for 25,000, okay, and 15,000. So we are going to record that also. Also, like 3 transactions were done. So now this the remaining is your cash generated from operation. Now since you have paid the taxation as well, basically you have paid the income tax, you have to deduct that income tax from here. So like it was 55,000, right? As it is given in the question, like 55,000. So you have to deduct that from your cash generated from operations. Thereafter you will be left with net cash generated from operating activities. Okay, so this is your balance. Now moving ahead with the investing activity. So as I told you, under investing activity the direct method is followed. Okay, so you have to directly just record all whatever has been said. Like in this we have for the investing activity we have like sale of property, plant and equipment, that is of 70,000. So we are going to record this first, like 70,000. Okay, they have recorded the other amount, basically the payment, that is not an issue. You can record 70,000 also, like this transaction for, thereafter you can make the payment as well, no problem. Now since we have also purchased PP for 4 lakhs, so that has also been recorded here. Now after that you will be left with net cash generated from the investing activities. Okay, like you can record it here also, no problem. Okay, like let me just record it. So you are left with 3,30,000. Okay, so now we have this cash flow from financing activities. Okay, so let's just move to the question again. So under financing activity we only have to record this transaction, that is the share capital issued. Okay, so shares were issued for 5 lakhs, we are going to record that first. So like okay, so we have recorded it here, 5 lakh. Thereafter we have paid a loan as well, right, of 2,50,000 as was given in the question here. Okay, so we have recorded this also. Now other transactions like debenture redeemed and the dividends, so we have to record this also. Okay, 50,000 and as well as 1 lakh. So just okay, here 50,000 for debenture redeemed and dividend has been paid for 1 lakh, so we are going to record that. Now we are left with how much? 1 lakh. Okay, so after calculating all this, okay, how much was the net increase or decrease, so we are going to calculate that. So just calculate this much, like how much is left. Okay, this is your negative balance. Okay, so this is your negative balance, we are left with 65,000. Okay, so in beginning we had the cash and equivalent was given in the question like 10,000 and 70,000. So the total cash we had in the beginning was 80,000 and at the end, that is the closing period, we had 15,000. Okay, so this was your net change. Thereafter this was your opening balance, so we are left with what? 15,000 only. Okay, so if in case this answer matches with your this answer, that means basically your question is correct. Okay, because your basically the change has like 65,000. Thereafter you have added the beginning balance, so you should be left with your closing balance only. Okay, so this gives you a reality check whether you have properly prepared the cash flow statement or not. Alright, so stay tuned, and in the next lecture we will be covering the indirect method. And if in case you face any kind of problems or you haven't understood any kind of thing, you can just comment below. Okay, and all the queries will be handled by the senior teachers also. Okay, and